You think we lose? What is that? Where? Oh, it's over there. I see it. You think we lose credibility by rolling around on these things? You gain credibility? People like it. Whoa. I think the key is to show confidence. Hello? You see what you know what that is? That's a real phone. That's a real phone. All right, are we ready? Here we go. Turned it off. Everything good? Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? You ready for a holiday weekend? I've had more people ask me about this holiday weekend coming up than really anything. Like, what are you doing? You just ready for a break? Everybody got big trips planned? Tell me where you're going, man. I have a big trip planned to my house to do some painting, and we got some lights put up, by the way. It's beautiful. Looks good. But I hope you enjoy your trip there. Welcome to our show. It's called The Closing Beat, Stock Market Update Show. We cover the stock market and lots of cool things here to share with you here today. We've got all sorts of cool things going on. We have a class for clients coming up this Thursday. I'm going to show you how to get around some of these new tax proposals. Take it away there, Blake.
Raiden Wealth, a show produced exclusively for our clients here at Jazz.
He knows. Hey, anyways, there's a lot of proposals coming out, and what we're going to do is show you how we're already starting to strategize around them, right? So that we know what we're going to do, and then if they raise the numbers, lower the numbers, we can reconvene and figure that out. That's every Thursday for clients. This Thursday will be the topic. Also on our research site, if you want to join us, you're welcome to do that. It's $13 a month. It's free for clients, so don't bother paying if you're a client there. We talked about the stock market's performance around tax season. And we also, I think tomorrow we're going to post the stock market's performance around Memorial Day, right? Because it's supposed to be the whole sell in May and go away till Labor Day. How does the market perform around Memorial Day? It should be rather calm, right? So we're going to show the stats on that one. Anyways, for the stock market today, you can see it off to the right-hand side of your page. A little down day. That's not how we started, though. We started positive there. The markets continue to believe that inflation will be transitory, which is Wall Street or fancy person talk for not permanent, right? I actually looked up the definition so that I give it to you, but it just means not permanent, right? So inflation's temporary. We're going to get back to where we were. Don't you worry. You're not paying all this money for lumber and iron and all this great stuff that, your chips, those potato chips are out of control. Anyways, we continue to believe that. How do we know that? Let's take a quick look here. So we go over to the charts. We look at the 10-year. So we're looking at the 10-year. I've got the 10-year futures pulled up here. The 10 years back to the pre-inflation concern numbers. This was a Friday where this happened. That Friday we went up to Blue Ridge as an office here. So we had this big spike and then reversal, which put in our temporary top. Well, we're back to that. So people believe, okay, inflation is no longer a concern. We also have the 10-year yield down under 1.6%. So we're obviously not scared of inflation there. The Fed has been speaking all over the place, trying to get people to believe that the inflation is just temporary. Don't worry about it. House prices, airline prices, hotels, all this great stuff just because people are excited to get back to work. Well, now what, right? That's where the stock market's at. It's saying, well, what's next? If we don't have anything to be scared of, we don't have anything to be excited about, give us a reason to move. And so you see that today we'll start with the NASDAQ, right? Take a look at the NASDAQ today. Closed above the 50-day yesterday, held up there today, not looking too bad. It looked like it was going to be the Russell's turn here today. It didn't do it, right? We got above it, we closed below it. It's not quite sure what's going on. You want to know the reason behind that? So what's happening is the smaller cap stocks in the NASDAQ and small cap Russell stocks, well, they're lagging behind. They're not actually lifting everything along with the big cap, large cap stocks out there. So it's a little bit of needing to play catch up there. Well, we don't see that, right? So the Russell a little bit weak there. And truthfully, it's that question of what's next. Do we get excited about the infrastructure bill? Is that something that we need to look forward to? Are we looking forward to some maybe inflation concerns again? What's the whole deal? What are we actually waiting for? And I think that's basically where the stock market did its thing. It's also summertime, so it's normal to see some of these sort of calmer days here. But with the NASDAQ and the Russell, it's really a small cap game, which is what we've got going on there. If you look a little bit further, we'll look inside the Dow here. Healthcare held us back today. You could just do a quick sort of scan of the NASDAQ or the Dow and see that. Merck down about 2% on the day. Healthcare in general was weak, but inside the Dow, you also had Amgen pulling back to the 200-day moving average. You're going to have energy. It's going to be a common theme that we talk about here today. Energy also pulled back. Chevron, one of the bigger losers there. If we go over to the S&P 500, slight down day there. It's up 12% year to date. It's still underperforming the Dow, by the way. The Dow's up 13% there. Now, we had most of the tech stocks today, right? But we didn't quite have the banks there. We had small gains in Facebook, right? About 1% on the day. Amazon, I got a stat to share with you here in a second. You had Microsoft as well. Just small up days there, but we had small losses in the banks, right? They've been really strong lately and nice and consistent. But we had a 1% loss in banks. You even had MasterCard pull back today, 1.33%. Bank of America down on the day. And so because of that, we didn't have any real recipe for a continued rally or a broad pullback as well. Cruise lines stand out. If you want to look at Norwegian Cruise Lines, very strong here today. Royal Caribbean, very strong today. Carnival Cruise Lines, very strong today. But there's a problem. There's a problem with these. They've all reached short-term resistance areas, and they hit it right on a dot today and started to pull back. So we've got resistance from the downtrend here. If you look at something like Norwegian Cruise Lines, you got the same resistance here in this weaker or stronger downtrend, but that's the short-term resistance. That's where everybody's looking at. Over to Amazon real quick. Amazon and Netflix, I've been telling you these things have been sleepy. Here's where we're at with this. Take a look. So you can see it. I don't have to draw this really, but if you take a look at Amazon, nothing going on here. Just trying to draw a line. It won't let me. There we go. You got nothing going on here. We're essentially trading in a range. What we did is we said, okay, we did this yesterday. So let's take the last, what is this, about 200 days. So we look over the last 200 days and we find that there's a range between highs and lows here. It's actually a 24% range. So that's it. You're within a 24% range, plus or minus, right? And so what we did is we said, well, how often does that happen, that it moves in such a small range? Or is that even small? Well, there's only been one other time in history, it was just a couple years ago, where Amazon traded in such a tight range for such a long time. So it's not normal that Amazon is quiet here. This is the obvious high that everybody wants to see it get above. This is the obvious low that we're all looking at. Everything else inside of it is a question mark. So if you're looking to trade Amazon, you got nothing, right? Now, the sad part is you can go do the same thing with Netflix. I won't draw the lines, but you can see it. You got a series of equal highs, equal lows. We're trading inside that range. Take the 200 days there, you get about 23%. That's actually never happened. For the entire lifespan of Netflix, it has never traded in such a tight range for such a long time. This doesn't look very tight, but obviously, it's a high-priced stock. So never happened. That means that anything between the lows and anything between the lows and the highs, you're guessing, right? Your guess is as good as mine. There is no clear evidence one way or the other. It's likely going to take next earnings season to get this thing to move out of the range. And if it breaks below, you see chaos to the downside in the short term. Breaks above, you say coast is clear. We're going to get back towards a pattern of growth there. So really, really interesting there. And that's kind of what I wanted to point out, at least initially here. The other part would be, tell me what's next. What causes people to invest more? What causes people to worry a little bit and take their profits? That's where you stand. If we go over to the sectors here for the day, most all the sectors finished in the red today, sadly, but the markets still were basically flat to a little lower. Energy keeps teasing us here, down 2% on the day. It is the worst performing there. It is, hey, will it pull back? Are we going to get a nice pullback? Are we not going to get a pullback? One day it looks good, one day it looks bad. That's what you got going on there. ExxonMobil was one of the bigger contributors to the downside today, and I already said Chevron was also that. If you're looking at other ETFs, you're trying to find a way to participate one way or the other in the oil space. You have oil service stocks and oil explorers. XOPs, the ticker symbol you see on your screen there, and oil service stocks, OIH. It's a way to get a little bit more focused if you're trying to play the energy sector, not as a whole. Financials were the third worst performers today, but exchanges fared the best, right? MSCI, you take a look at that one. That one was up 1/3%. Market Access, oops, there we go. Market Access with a tiny little gain on the day, about 0.5%. S&P Global, these are the exchanges inside of that, actually finished about flat. Other than that, you have financials as a whole pulling back because the bigger banks. Citigroup pulling back 1% today. Morgan Stanley pulling back. However, these are the leaders. By the way, the biggest pullbacks today in financials were your leaders over the last month. So they did well over the last month, taking a little break. It's nothing to be scared of here. You go Morgan Stanley, it's up 10% over the last month there, right? Not a big deal if it pulls back a little bit. Capital One up 16% in the last month. Do you care if it pulls back a little? No, you kind of hope it pulls back. So that's what's going on in financials. If we go over to industrials and basic materials today, as far as those other sectors there, these two participated in the sort of fading away throughout the day. The stock market started okay, it was kind of strong, and then faded away, but not every sector faded, right? Industrials and basic materials were the two that faded away with it there. Now, industrials, if we look at industrials, you had a little bit of help from Boeing, right? We'll cover the news in a little bit. You had a little help from the airlines. United Airlines, 1.5%. Delta Airlines, about the same, 1% as well. Carrier is a notable stock trading near highs, very much showing you relative strength here. It refuses to pull back. Compare it to industrials. I mean, it's starting to pull back, but you see it's holding up there. It's one of the stronger ones to point out. Not a sector, but if you take a look at home builders, they also did well today. I think it was the best performing industry in the stock market today. Got lower rates, right? Just the fact that rates are moving lower, everybody was excited about that. And I want to point out gold. Gold continuing its breakout rally. We covered that rally in the research site, talked about what was happening, that it could break out and why it would do that. We're also approaching the first target there. We talked about resistance areas. If you were to trade gold, where you'd be looking for first targets there. Very nice, huh? All right, let's go over to new highs for the day. There were 29 of them. Most of them did turn negative. So it wasn't like they were all magical and everything was good. You want to be excited. But there's a couple to point out. News Corp. If you want to take a look at that one, basing at highs, showing good relative strength. Did touch new 52-week highs. It's just one of those days where we didn't have the markets behind us, so maybe one for a watch list. MGM, you know the deal with them and Amazon, $9-10 billion bucks, whatever it is. Who's counting? But that broke out to new highs, and you'd like to see that consolidate, right? Could we just consolidate a little bit, then give me something exciting there? So we'll see what happens there. Arista Networks, here's the breakout. Let me just draw a little bit of a line here. Right, you got a simple little breakout, obviously strong. Everybody was excited about the breakout. Any pullback would be perceived to be viable by the tech traders there. Now, speaking of tech, go over to semiconductors. You got Analog Devices. ADI is the ticker symbol. Broke out, but if you're a frequent follower of the show, you know it's my least favorite breakout of all of them because it expended all of its energy just to break out. We don't like to see that. There's actually one new low today. It was Clorox. Consumer staple stock has been beaten down. Touch new 52-week lows, did come off of them, but still not a good sign there. Not one you want to be the first player to bet that this is going to reverse, in my humble opinion. All right, stocks in the news. Here we go. Lordstown Motors. These are the guys with the hideous truck, by the way. So it goes public. This is a SPAC, right? You can always tell because it has trading history before the actual merger date there. They said, hey, we need more dough. We need a lot more money than we thought. We're also going to produce less of these ugly trucks than we initially thought, about 50% less. They said maybe we're only going to produce 1,000 trucks total. So does that mean there's a demand issue there? What's going on there? They also said our production costs were just a little bit off, guys. We were a little bit off. By about 50%. So we actually need a whole lot more money here for our production costs. Darn it, you know, we'll go raise money from the markets because we can, and actually now because we have to. So I don't know, if you're looking into something like that, seems like those numbers should have been a little tighter. I'd be a little upset if I was an investor in that one. All right, Boeing gets another, 14 or 15 737 MAX orders from SMBC Capital, I believe, was the people that bought that there or put their orders in. Yep, it actually was. And so obviously the tide's changing there, so it's kind of nice to see. Cracker Barrel beats on earnings by $1.19. They're doing well, man. Cracker Barrel has revenues better than expected, raises guidance. People are sitting outside in the rocking chairs, just waiting hours for them to come eat there. They were also one of the least affected restaurant stocks by the virus downturn because of the location of the majority of their stores. I covered that in a research post a while back. Square says that, well, Bloomberg says that Square is about to start accepting checking and savings accounts, that they want to be the one-stop shop for finance. And hey, I think it's smart. It's a good idea on their part there. Up 2.5% on that news. AutoZone is going to be earnings related, breaks below the 50-day moving average there. Beats on earnings by $8.10. Revenue's better than expected. There's a little problem with AutoZone. I just know because it's something we look at often. Compared to the others, O'Reilly, well, you want to look at O'Reilly there, Advanced Auto Parts, things like that. AutoZone has the most amount of debt relative to any of those. You can look at it quickly by just comparing debt to assets. Almost double what their competitors are. So that's, it's a consideration. The other thing is their expenses are also quite higher than their competitors as well. And I think people just looked at the stock here today and said, well, all right, earnings were good. They weren't stellar, like ripping your face off kind of earnings here. And maybe I'll put some of my profits in this towards something else where it's a little bit safer if interest rates become more sensitive or it becomes harder to borrow money. Not a big risk at this point, but I think that's probably what people are looking at all in all. All right, Shake Shack, I got a couple others. Shake Shack up 4.4%. Goldman Sachs says this pullback is a good one. You're going to want to buy it on this pullback here because of their positioning being smaller, able to have their stores like up and running full capacity and everything. So it gets about a 4.5% gain on the day. And what do we got? Lastly here, Alaska Airlines says to return. This is an easy one. Check this one out. Alaska Airlines says we're going to return to 100% of our 2019 capacity by 2022. Now you see people out there on airplanes, right? You've done your research. You heard what I did yesterday. You did that last night. That was your homework. You know that people are flying like crazy. I would bet that that date changes. I'll bet you they'll be to 100% capacity sooner, which means that's going to be a boost for the stock when they finally do announce that. So I think that was a bit of a gimme to the markets there to let you have that. What else do we have? I'll let the stream catch up. See if I can answer some questions for you if you have any. Other news: Japan adds the U.S. adds Japan to the do not travel list, level 4, by the way. They don't want you going there. The Olympics coming up, and Social Security. I'm getting word that Social Security is testing a new statement layout. You know, when you go to SSA.gov and you look to see what your expected benefits are or your estimated benefits, they're laying it out even easier for you. They're doing a little test sample there. I had a client say that they were one of them. They saw a different layout. It sent me a screenshot. I'm like, it doesn't look right. I thought initially he went somewhere he probably shouldn't have and fell for some scam. But nope, they're testing it out actually. So just a handful of people trying it out. If you happen to check it out and you see that it looks really simple to figure it out, then you're one of the beta testers there. So congratulations. All right, we got Capri tomorrow for earnings. Dick's Sporting Goods, U-Haul, American Eagle, NVIDIA will be the focus. What else? Workday, Williams-Sonoma. You got a handful of different retail earnings coming out. And AMAT paying out 24 cents in dividends, as well as International Paper, 51 cents. So not too bad there. Let's see what questions you have, if you have any. You think Clorox is a dog? Raise money when you can, not when you have to. Even if your trucks are ugly and your numbers were way off, go raise money. Yep. I know, right? We'll see. Oh, you got that UAL. Okay, cool. You're planning on holding it a week. You hit your profit target in a day. Now, that's a good question, right? What do you do? What do you do if you buy a stock and you say, I'm shooting for 8%, 10%, 5%, whatever it is you're shooting for, and it happens in a day? Always a tough spot for people's trading plans there. What do you do? You take the money, right? Take the money. Of course, your plan says take the money when you hit your profit target, unless you have a time stop in there. That's what you do. Ashish, Dustin, your thoughts on the markets in your opinion as gold mining stocks are showing relative strength? Should we be cautioned? Gold mining stocks, gold stocks, silver in general, silver suppliers, things like that, all doing really well. They're coming out of, well, besides silver, coming out of a bit of a pullback there. So I don't think there's any room for concern yet to use this sort of economic theory to those, but could be, right? You see how usually gold doesn't just go and take off. There's fits and starts along the way because that's a global participation here, right? So it's hard to get that moving in one direction. That part maybe bothers me a little bit. Yep. Matthew says the ugly truck. Hey, I'll give you that. I'm not a big fan of the Cybertruck's design. I think it's cool that they went outside the box, but I'll give you that. The Lordstown Motors, their truck at least looks more like a truck, but now I'm worried, man. Can you trust it? Are they even going to be able to make 1,000 of these? How can you trust them when their numbers are off by that much? I get it. as you grow, it's harder to project numbers to a really efficient sort of range. But 50%, come on. I'd like to see what's going on there. How'd we miss by 50%, man? That's crazy. And that's something. You follow the plan, man. Follow the plan. I like that comment there. Hey, well, I'll wrap it up. We'll call it a day. You enjoy the rest of your day. Thanks for coming by and hanging out with us. We'll be back tomorrow, of course, to do this all over again. And if it helps you to help us, hit the subscribe button. Yeah, that'd be cool. We appreciate that. Enjoy.